I'm here to help out with a couple of the Wiley Plus problems that we have due for this week. First one I'm going to look at is problem 2-2A. The reason the journal entries in this problem are not difficult. Well, doing the journal entries, there should be nothing confusing with that. But what I really wanted to bring your attention to was how they've laid out the TAccounts here in Wiley Plus. How they've laid them out is more of a horizontal view, as you can see here. And what they want us to do after each one, and we'll do some examples to kind of help illustrate this, is they want us to update the T-account balance at the end of every transaction. Okay, so that's kind of the new part with this one. They're just kind of going through and helping to reinforce that a T-account can be shown a balance at any point. So let's go through some of these and work through maybe the first 4 or so. With the first one here on May 1st, date's pretty easy. We asked the question, what did the business get and how did the business get it, is our credit question. So when the stockholders invested a little over $20,000 in cash in exchange for common stock, so what the business get, they got money. In accounting terms, we call that cash. In Wiley Plus, you always want to type in the first couple letters. In this case, it's pretty easy, but it's always best to use the drop-down. So therefore, if you have a misspelling, you will miss it if you happen to misspell it. It's very tricky on that. So use the drop-down. Just type in the first 3 letters. That's usually the best. And remember back to the last one. If you don't know what account to possibly use and they don't have the account that you're thinking of, always go down here to Show List of Accounts, and that'll kind of give you a good starting point for what accounts that could possibly be used. So when I pull this up, it's showing me all the different accounts that this company could be using. Now that's a lot there, but it does help narrow it down some at least. And then always you can go to Link to Text here if you are struggling, and those 4 different links there will take you to different areas. Part of it will be journal entries, part of it will be T-accounts, and then as you'll see at the very end, they do have us do a trial balance, which is one of the things that I went over in my previous lesson on journal entries, T-accounts, and trial balance with Marty's example. So back up to this one here, we got cash, and where it came from. Now in my examples, I always like to use capital, but this is a corporation type setting. So when it's a corporation, we use common stock, and that's what it tells us here in the opening information, that it is common stock. Remember, those two are synonymous. They mean really the same thing. So my cash was debited by $20,100, and my common stock credit. And once you put in the credit, notice it does indent for us, so we don't have to do the indent. Now what I want to do is start to update my T-accounts. So on May 1, I did have a cash entry, so I'm going to show that. And it was a debit of $20,100. And now, as I had previously said, we want to update our balance. So this one is very easy. If we only have one entry, that is the balance of that T account. And then I want to go down to my other account that was used, the common stock, on May 1, and show that I had a credit of $20,100. And that is my balance. It's on the plus side, so it's obviously a plus number. We should never have a negative balance. Now the second one is kind of a trick one, and I went over this in one of the examples that I did previously on another video. But on this one, we are hiring a secretary for $2,300. As of May 2nd, no work has been done. The business hasn't received any benefit. We haven't given a benefit to somebody by, say, doing them a job. So when nothing really substantial has happened, this is kind of their Wiley Plus is trying to trick us here. We want to read this red area real close, and if there is no entry required, we simply want to put no entry, and then put a 0 in the debit and credit, in the debit or credit column. May 2nd, we didn't have anything to do. So let's move on here to May 3rd. Purchased $2,300 of supplies on account. Okay, so what did the company get? That's my debit question. Well, we got supplies. Now I need to think, is that a supply expense or an asset, or do I need to count it as an asset as regular supplies? And then we can easily answer that with the two expense questions that I went over in a couple previous lectures. Remember, the two expense questions were, am I using it right now, the supplies? Well, I don't know if I am. I simply just bought them, and then I'm going to be using them over time. So if I'm not using that right now, then I can't call it an expense. I need to simply use the supplies account, which is an asset, and not call it an expense until later, which will actually be our next part of our next week transactions when we look at adjusting entries. So I'm going to debit my supplies for the $2,300, and then I need to credit how I got the supplies. What did the business do to get them? Well, it says instead of paying cash, I put it on my account. And this is a relatively low dollar amount for a business, so it's not something I'm going to pay off over years. I'm going to pay this off over the next few months. So that's called an account payable, part of our liabilities. $2,300. Now I want to go ahead and update my TAccounts. So I'm going to come down on I notice my debit was supplies for $2,300. I know that that's an asset, so it's going to be one of the first ones I encounter. And I put my debit in here of $2,300, and I need to make sure I've updated my balance. Now this program is kind of helping us to know that I'm probably not going to have another supplies entry because there's no room for it. So just a little FYI there, that if you have another supply account, it's not going to be right. And then my credit was to accounts payable on May 3rd, and that was $2,300 as well. And that's what its balance is. Remember, credits are a minus plus, so this is on the plus side. So my balance is a positive $2,300. All right, let's do one more to kind of help on the balance part, because I think this one will involve an account we've already used. Number 7 here, or the 7th of May, paid office rent of $750 cash. So I asked, what did the business get? We got the use of an office building. We rented it. So then I think, okay, if the business got the benefit of something, that's possibly an expense. Let's check the two questions. Is the business using that rent right now? Yep, we're paying it for this month. And is the rent going to last me more than a year? No, rent never lasts you that long. So this is a very typical expense, $750 rent expense on May 7th. And then why or how did the business get the use of using a building? Rent. We had to pay money. Now I can update my TAccounts. Rent expense, debited of $750. So I go down to my expenses, which should be at the very bottom. And that would be its balance too. Now I'm ready for cash. This is my second cash account. I had a credit of $750. My balance now in my TAccount is no longer $20,100. It's now $20,100 minus $750. So see how that works. I don't want to put a balance here of negative $750 because I'm not balancing just this day. I'm balancing the entire TAccount. So my my balance would be, if we do the subtraction, you might be able to do this in your head, $19,350 would be my balance because this is taking money away. The last thing that you're going to do on this one is simply provide the trial balance that I went over in that last video. So we always start with cash. Cash is always our very first account that we always use, and then we put in the rest of the assets that I used in their correct order: liabilities, equity, revenue, and then finally expenses. Remember, they have to go in their particular order, a nice, neat order. And then we always put our final balances from the TAccounts in their correct column. So like all of our assets will have a debit balance because that's their normal balance. That's where the plus side is. And when we're all done, to help us know if we're right, our debits better equal our credits. So if it was $55,000, $5,500 maybe, my credits better be $5,500. All of these added up better be $5,500. That's just, of course, an example. Now, the other problem that I wanted to look at was this one, exercise 2-10. The key with this one, and this one can be confusing when you're looking at it and starting to answer it. It's not confusing right off the bat. You think, oh, okay, they're giving me some TAccounts. And then when the transactions happen, so we had a debit of $10,300 of cash on 4/1. So I'm probably going to be able to find corresponding $10,300 on 4/1. And that's so we can tell what happened. The business got money in exchange for an investment. But what the directions tell us is prepare the journal entries, but only the journal entries that involve cash. For whatever reason, they don't want us to do everything. Only provide the journal entries when cash is affected. Okay, so we look back up here at my T account and I see 4/1, $10,300, and we already looked at the credit. So on April 1, $10,300, oops, that's the cash. And when I found the corresponding $10,300 on April 1, it was to common stock, which makes sense. You got to have an initial cash inflow before you can really do anything in the business. Now, if I pull down this little menu, and this was what can be confusing at first. You say, man, my next date is until April 12th. That's the second option. When I'm looking up here and I see, well, I've got a date of 4/4, and another transaction happened on 4/7. But remember the directions only wanted accounts that involve cash of either the debit or credit. If I look at my supplies, for example, on 4/4, and I find a corresponding 4/4 somewhere else, it's here in my account payable. So the business got supplies, but they bought it on account. Therefore, cash wasn't affected at that point. So we're not going to do this, as this instruction says, it doesn't involve cash, so we're not going to do the journal entry, which is kind of weird, but it's just what this problem is looking for. So my next cash entry is 4/12. We received $760. Now we need to find out why did I get $760. So I look down through for another 4/12. Here it is, 4/12. I got $760 because I did a job for somebody. That's what that's telling me here with this service revenue. So I'm going to come down here and debit my cash for that dollar amount, which was, I forgot already, $760. And I'm going to want to credit my service revenue for $760. So we're going to go down through the remainder of those and do that, and then provide a trial balance. So the trial balance should be pretty easy. You're just going to add up all of our, say for our cash. So you probably can't see the calculator. I don't know if you can, but I'm simply adding up here all my debits for the $10,300 plus the $760. 580 and 1840, and then subtracting out my two cash payments, $1,420, and it happened to be the same amount again, $1,420. So $10,640 would be my first answer on my trial balance. Remember, cash always goes first. It's always in order of liquidity, and we got to go in the proper accounting equation. So assets are first. And then the number that I just figured was $10,640 would be my debit balance. Nothing goes over here in the credit column because cash doesn't have a credit balance. It only has a debit balance. Whereas something like accounts payable will have a credit balance. So that, therefore, whatever you get when you take 3730 minus 1420, your final answer is going to go in the trial balance as a credit. I think that was all that I really wanted to go over on this one. This last one here don't get too confused with it. The first thing it's asking us here is how is the parent equation going to be affected by a transaction, and then what account is actually used. So if we looked at this one, we borrowed some money from the bank by signing a note. So the debit question is, what did the business get? And hopefully by now we can think, oh, we got cash. Well, what is cash, and what happened to the parent account that cash is attached to? Well, remember, cash is an asset, and I got money. My cash went up. So what I'm going to pick here is the increase of an asset. And then I ask myself the credit question, how did the business get the money? Well, we got it by taking a loan out. So my credit is going to be to the note payable. And then I got to think, well, what is a note payable? What parent account is it affecting? Remember, that's a liability. And what happened to my liabilities? Well, if the liability is on the credit, if we remember our normal balances, the debit is a negative, the credit's a positive. So if I'm going to credit my notes payable, that's going to make my liabilities go up, just like what my assets did. So I'm going to have an increase to my liability for that answer. And then down below, we're just simply doing the transaction. Okay, that's it. If this video kind of helped you out, let me know in the comments there of YouTube. Hit the like button. It just helps to reinforce that these videos are helpful for you. Our next videos will cover some adjusting entries, and that is our next step in the accounting process.